When I speak to business owners, they often ask me, how does a private equity firm decide which company to invest in? And obviously they also ask, how can they position their firm so that they're more attractive to private equity? So let's take the first question first. How does a private equity manager decide which of the hundreds of opportunities are presented to them to invest in? And every firm follows a process of analysing the companies that are presented to them across multiple different aspects: financial characteristics, their competitive position, the market in which they're in, the management team and their capabilities, the period of time the company's been going, its potential future growth prospects, and, critically, a potential future exit pathway. Now, they're all quite complex in their own right, but just to summarise, every private equity firm needs to see a business which meets their investment strategy, has got a good history of profitability and a forward trajectory of future growth. They've got a leadership team which can be described as world-class, and they're willing and able to hear the advice and the counsel from the private equity firm as to how to make their business bigger and better and more valuable. And even then, it's very important that that particular investment meets the strategy that the private equity firm has told its investors they're following. So in our case, for example, we were majority investment investors. It was pointless looking at a minority investment opportunity because we'd told our investors we weren't going to do that. There are, of course, plenty of private equity firms that do minority investments, so you go to that type of private equity firm if you're trying to get a minority investment into your business. From a PE firm's point of view, the company must meet their strategic objectives along those parameters. And just to go through those, the financial parameters are critical, the leadership parameters are critical, the market in which they exist is critical, and the growth outlook for the future is even more important than almost any of those. If you get that right, you're going to be looking at doing 1 to 2 deals for every 50 to 100 companies that you look at, which is why, of course, it takes a long time for a private equity firm to decide to buy or invest into any particular investment.